Didn't think I would be live right now. I didn't either. It's a little bit late, but here's a market review. As always, these are just my interpretation of the price. Shout out to ICT. Let's get straight into the market review. As we see today, we had unemployment claims at 8:30. Then we had a Treasury currency report at 4 p.m. I honestly don't really even know what this 4 p.m. news is, nor will it really impact my personal trading because I like to trade during the AM session. But we had 8:30 a.m. news, which is something of importance. All right, here's the daily chart on Nasdaq, and this is how it delivered. As we see, what is the current order flow? The current order flow is bullish, but we had an indecisive candle, so this could possibly stem us. This could possibly is a good candidate for us to possibly trade back within this fair value gap, or have a manipulation move in that fair value gap to then displace higher. And the way that we close today, I think that lower prices are probably are possible. I think that lower prices are possible here, but we got to see what the overnight session does. Obviously, I'm not going to go into the next day, which is a bias that says, "Oh, I'm just going to short everything." No, I got to see what the market shows us. As you see here, and I want to point out Dow. Dow did the opposite of ES and NQ. So Dow actually had like the reverse of what NQ did. So Dow had a bullish day. NQ and ES both had bearish days, which is it's pretty interesting. Look on here. Here's the ES and NQ chart. So if you want to mark your annotations. All right, and here's that ES chart. We had high resistance liquidity going into market open. Where is high resistance liquidity? Where's low resistance liquidity? As we see here, we have buy side taken, buy side taken. We have a 1, 2, 3 drives higher, and then we start to break down. We change our steady delivery on the 1 hour, and this gives us a good indication, a good feel that we're more likely to see lower prices this morning instead of higher prices this morning. So that is what gave me my bearish bias when I was on live today. So as you see here, here's a 15-minute chart of ES, low resistance liquidity signature, low resistance liquidity signature. As simple as, where is the high resistance liquidity, where's low resistance liquidity, and on top of that, are we closing below down close candles? As we see here, we have closed below these down close candles here. This is now your order block. And boom, we're going to respect that. We have another order block. Boom, we're going to respect that. And then we leave this as a breakaway gap. And then boom, we deliver to sell side. And here's a 15-minute chart on NQ. Whereas the low resistance liquidity, as you see here, easily low resistance liquidity is below us. And this 15-minute fair value gap also contains an order block, which is why I think that we kind of stopped at this fair value gap, because it has an order block with it. Anytime we have a fair value gap with an order block, the algorithm is going to look to reprice that area to offer fair value within the market. All right, and here we have a 5-minute chart on ES. And here is right about market open. Here's that 9:30 open. As you see here, what is order flow? Order flow is already bearish. Order flow has been established, been bearish with that 1 hour change in state delivery. As you can see here, we have market opens up here. And what I want to point out is the fact that we take sell side liquidity here first. We purchase sell side liquidity, then we come back up and we take buy side liquidity, forming an SMT within this fair value gap, within this order block, within this 1 hour order block. As prices change in state delivery, as we have high resistance liquidity signatures at buy side, and we have low resistance liquidity signatures below us to sell side. So this now, we have things aligned. We have induced shorts within the market, then we come back up, then we take buy side with an SMT. That's crucial at a key time of the day, 950 macro, to then have that displacement lower. So this was a very nice 950 macro, and yeah, it delivered very nicely. And here's that 2-minute chart on ES. And here we have that 950 macro. I'm mopping out. We have SMT. We're coming back in with this fair value gap here into these order block candles. We have displacement. And notice here, fair value gap in, fair value gap out. That is now, we now do not want to see, and definitely don't need to see price come within here. We have manipulated higher, manipulated out. Boom, fair value gap right there. And then we end up flushing to sell side. That would have been a nice, that was a nice tape read this morning right there. And now, what does price end up doing? We end up at 10.10, starting to move back up to buy side, coming back up to reprice this order block to then have displacement lower, fair value gap entry right there. All right, and here's that 2-minute chart on NQ. And NQ actually took a bigger sell side liquidity pool. NQ took a bigger sell side liquidity pool here at market open. Boom, we take sell side, then we come back up, form that SMT here. And the same thing, fair value gaps in, fair value gaps out with the SMT here. And then, as we see here, just the nice sell-off on ENQ. on NQ. That was very nice delivery. Low resistance liquidity signature. That's exactly what you want to see in price. And here's a 5-minute chart on ES, and this is after we have taken sell side, and we also have repriced into this daily fair value gap. We can possibly frame a internal range to external range setup here. I wouldn't love it just because we've already taken sell side liquidity. Like, I don't need anymore. Like, I would have got that 950 macro entry. That's all I really need. But in terms of just backtesting and tape reading, what do we end up doing? We end up taking sell side here. Then we end up repricing to the middle of this range into this fair value gap, into these up close candles, into this breaker right here. So you have a high confidence area. We've already had SMT at highs. We've already have confirmed that we are bullish order flow right now. This is just a reprice higher to attack on profitable stops and to induce longs within the market. That's all this is doing. And here is that 1 minute chart. If you break that down, we end up coming in. We end up taking these highs right here. Come reprice right to this fair value gap right here. Then we have our changes of delivery here. Below these down close candles, this gets claimed as your order block within that 2 minute imbalance right there, and we end up displacing lower. And notice this imbalance here. Why is this imbalance of significance? Because we have fair value gap in, fair value gap out. That's a balanced price range. That's going to be sensitive. As you see here, we end up using it on the sell side of the curve. Once we break through it, we end up coming in and repricing right to that, right there. Boom, reprice right to the tick, and then we get displacement lower. And notice how this is also occurring within these 3 down close candles where old buying occurred. So now new selling will take place within that. Once we break through it, boom, come back in there. And here's another place of old selling that we kind of almost touched, but then we just sold off. So the fact that we didn't come back within this area of old selling is a pretty bearish signature. And that's why we end up selling off a little bit more. And that breakaway gap that I pointed out earlier, the reason why this is a breakaway gap is because it is balanced on the 5-minute time frame. So it's balanced on the 5-minute time frame, so we don't really need to reprice to it on the 15-minute. The 15-minute shows a fair value gap, but the 5-minute shows a different story. All right, and here we have a short-term low engineered right above the draw on liquidity. This could frame maybe a possible redistribution area. We come back in within this 5-minute fair value gap. We don't expect price to trade above this wick. That's now like a balanced price range. We don't expect to see price trade above that. It doesn't. It respects that balanced price range. We respect this fair value gap, and then boom, we get another area of distribution within the market. As here, we price right to that order block right there, and then we displace lower to the draw on liquidity. And here we have 2 p.m. This is a 2-minute chart. We have 2 p.m. and then we have a silver bullet setup. We have a first fair value gap within that 2 to 3 p.m. window. We come up, you trade into it, and then we go straight to that draw on liquidity. We're drawing towards this imbalance right here, and boom, we end up repricing to it, and we come back up, filling this, repricing this for value gap, boom, right there, leaving low resistance liquidity signature right here, and then displacing higher for value gap, boom, and that was kind of the end of the day, that action. Overall, this is like a nice little 60-point context framework to build a framework around right there. All right, and here's also what I want to point out is that the new day opening gap, if you look on NQ, new day opening gap, we almost ticked right to it, right to that. Almost, look at that, almost. And here is the new day opening gap, previous new day opening gaps as well on NQ, and just look at, there's distribution that occurs within that. Like, that's very nice to see. Distribution within there, and then we come back up, redistribution within the gap, and then we fail to reprice to this high. We fail to reprice to the new day opening gap. Boom, acts as a real resistance right there. And kind of just, I had a standard deviation projection as well. We're within that negative 2.5 area that we had having a reversal in the market. We end up taking sell side liquidity here. This profile reminds me exactly of, I was going to include it within the slideshow, but I believe it's May 22nd, 2024. I think that's right, but it's pretty much the same exact profile that we had here. We come up into all-time highs, and then we have this Judah swing within the market, and then we break down. Granted, that day it started a little bit later because of 8:30 news, but we had 8:30 news today as well. But it's pretty much the same profile. We leave low resistance liquidity within the market, and then we break higher, and then we have distribution lower. Anytime the market opens, I'm always looking at where's low resistance liquidity, where's high resistance liquidity, because we're likely going to draw to likely going to draw to low resistance liquidity first to stop out traders, or to an imbalance, and then reprice towards that low resistance liquidity. All right, and here's that dollar index. I thought that we possibly could be in a market maker sell model, but we came back down just to this imbalance right here. Dollar has been very tricky recently, and I honestly haven't had a good read of what it wants to do. As you can see here, we respected this imbalance here perfectly. Now we're coming back up. This does look pretty bullish on the 1 hour. But yeah, we have disrespected these order block candles. We have disrespected that rejection block. And yeah, I think that higher prices are likely on dollar, so that could be a possible potential bearish continuation for Friday. As you see, Thursday we put in the high of a week, possibly, potentially. We're most likely putting a high of a week on Thursday, which could possibly set up for bearish retracement, bearish continuation on a Friday. All right, and here's YM. I just want to throw in YM. I honestly really thought that we were gonna attack these equal lows here on YM, but we never did. I was kind of surprised. I wanted to see that become the draw in liquidity, but we never actually took these lows, and then we just end up displacing higher on YM. I'm not gonna really include or tie too much depth into YM unless if it looks clear tomorrow. So I'm gonna kind of step away from YM and just. And if it doesn't look clear, then I'm not going to use it in my analysis. And yeah, that was kind of just the price action we had today. It's a little bit of a shorter review, but as always, I will continue to be doing these every single day, as well as the case studies. Let me know if you guys like the case studies. I'm going to keep on doing them regardless, because they're kind of just for me to interpret price and for me to kind of just get on here and just like actually speak what price does. And I feel like it just really helps me cement. And I feel like it's just beneficial to me. So yeah. Anyways, hopefully y'all had a good rest of your day, or hopefully y'all traded well today. Hopefully y'all didn't blow up. Hopefully y'all practice good habits and just trying to stay in this game for longer, not shorter. Like, this is a long-term game, not a short-term game. But anyways, I appreciate y'all, and I'll catch you guys in the next one.